As we think about that, and we've mentioned Apple a few times now, and I don't know what Apple's dividend yield is today, but let's just say hypothetically it's 1%. Okay, it may be higher than that. I don't know what it's at, but let's just say hypothetically it's at 1%. Why would we own an Apple in our dividend stock model? And why wouldn't we just go after those companies that pay such, very, very high dividends, the highest dividends?
Right. Yeah, and that's a question I do get sometimes is, why don't we just buy all companies that pay
Yeah.
6 or 7% dividends? So it's a great question, and we can certainly do that. We can find companies that pay dividends that high. What you'll find is that a lot of times those dividend yields that are that high are also the most susceptible to being cut. And so when a dividend gets cut, the stock market doesn't like that at all. And so even if it's for the right reasons, if a company cuts their dividend, typically their stock goes down quite a bit. And so what we try to do with that model is have a good mix of high paying dividend stocks that don't have much dividend growth, and try to complement that with some companies like Apple, where the dividend yield is not very high. I think it is below 1% now, but they're growing their dividend a lot faster than some of the companies that are paying a high dividend yield. So, for example, AT&T pays a dividend of about 7%, 6.5 or 7%, and McDonald's pays about a 2.5% dividend. So why wouldn't you just buy all AT&T and no McDonald's? Well, McDonald's has grown their dividend substantially over the past 10, 15 years. So like in 2006, McDonald's dividend was $1 per share. And fast forward to 2020, and I think it's scheduled to be about $5 this year. So McDonald's has grown their dividend from $1 per share to $5 per share in the past 14 years. Meanwhile, AT&T's has gone from like $1.30 up to about $2 or $2.10. So, you're sacrificing yield, but you're getting good dividend growth. So it's just really combining a bunch of those different stocks with different metrics to really get that model portfolio that has a little bit of both, right? Some good yield, but also some good growth.
Yeah.